Hello, everybody. I'm Adrian Diernel. I'll be acting as Master of Ceremonies and discussion moderator for one of the roundtables. So I have a few announcements to make before we get kicked off today. This is the first ever hybrid event. So we have people here in the room in Paris, but a lot of people are connected across the world listening to us on a live stream. As of this moment when I'm speaking to you, there's 600 people connected to this live. We have 2,000 participants who are signed up across 60 countries worldwide. Please use the platform to send questions or comments. You can see that in the interface online, you have that possibility, and these things will show up on the moderator's tablet and maybe be included in discussion. You can also use the platform to download some PDF files with information from the various sponsors of the event. You can also tweet to participate, and don't hesitate to add your comments, photos, or other things in the tweet feed using the hashtag IFF Paris. I take this opportunity to thank the 7 sponsors of this event, which are Groupe ADP, Aéroport de Paris, Mundi, BNP Paribas, Euronext, HSBC, La Banque Postale, and Société Générale. You can also use an app that's available in the Apple Store and in the Google Store. It's the Paris Europlace app. It has a couple of interesting features. Of course, the details of the day, the program, events, the bios of the speakers, but you can also use it to network across participants. For that, you have to log into the application using your personal username, password, and a 6-digit code that was given to you by Paris Europlace. At the end of today, we will have a cocktail that is co-sponsored by Autorité des Marchés Financiers, AMF, and AFG, Association Française de la Gestion. One final word of housekeeping is this is a COVID-safe environment, and so you're asked to keep your masks on at all times throughout the event. And now, without further ado, we can move on to the first roundtable. Let me call up the speakers and moderator. Please join me on stage for a macroeconomic outlook. Welcoming to the stage, Sophie Petter from the Paris Bureau, chief of The Economist, to moderate with Lorenzo Bini Smaghi, his chairman of Société Générale, joining in remotely, and Alain Duré, chief economist for France, Belgium, and Luxembourg of Goldman Sachs, Christian Noyer, honorary governor of Banque de France, Laurence Parisot, chairwoman of Citi. Please come to the stage for the first discussion. And we come onto the stage this way, and we exit this way following the arrows.
I don't know.
Thank you very much. We've got an exceptional panel, and we've got Lorenzo Bini Smaghi, I think, appearing behind me on a screen. So,
hello.
Hello, welcome to you, and I hope you can hear us here in Paris. We've got a huge subject to talk about, but we're going to divide it into 2. And I think we'll start by looking at the macroeconomic outlook, and then we'll sort of move on to some of the institutional questions. So I think the best thing to do is ask the speakers to reply straight away to the first questions, and then we'll come back and look at some other questions later on. If you've got questions that you want to add, you can put those onto the screen or raise your hands at the end. Alain Duré, let's look at the macroeconomic environment. What's your view about recent economic developments? How strong do you think the recovery could be? And is this current economic crisis different to the financial crisis 2008? And if so, how?
Thank you, Sophie. Good afternoon, everybody, and thank you to the organizer for inviting me. Let me start with the second part of your questions. In my opinion, I see at least three main differences from this crisis compared to the 2008-2009 crisis, which relates to the globality of this crisis. Globality first, given the nature of the shock that we have, because we had at the same time, and this is quite unique, a demand and supply shock, but also globality given the number of sectors affected in each country and the number of countries. That's explained that the negative shock of this crisis is up to 4 times bigger than what we experienced in 2008-2009. But on top of that, there is the third difference, which is the globality in the policy reaction. We had basically the policy, fiscal and monetary authorities were quite reactive from day one of the crisis. And what is quite important is, if you remember, in 2008-2009, especially on the fiscal side, and there was some hesitation, and even people were pushing heavily in-debt countries to consider a fiscal consolidation. Today, not only the European leaders decided to suspend the European fiscal rules from day one in March, but on top of that, at the end of July, we had this political agreement to establish a recovery plan of 750 billion to basically help, and the purpose of which is to help the countries where you don't have sufficient fiscal space to have an ambitious fiscal stimulus. Because the message was to say from the Europe was to say, well, stimulate your economy with outright fiscal measures. So that's explained that we. At Goldman Sachs, we believe that the all-baseline scenario of a strong recovery is, after the shock of this year, is a credible and realistic scenario. So our expectation is that after a decline of real GDP growth this year of about 8% for the euro area as a whole, we can expect a rebound to 7% and 4%, respectively in 2021, 2022. Now, the key point is, of course, we will continue to have subdued inflation, especially in headline and core inflation, probably below 1% for the next 18 months. So that explains also our expectation that we believe the ECB will continue to remain very accommodative and complementary to the fiscal stimulus initiatives, and also probably to extend the PEP program explained and described by President Lagarde next December in order to maintain quite cheap funding conditions.
Thanks very much. Perhaps we can cross to Lorenzo Binismaghi and bring you in there to ask about how you think the banks can help support this recovery. What is the role of the banks in looking ahead to next year?
Well, if I can complement what has been said, what's different this time around is that the banks and the financial institutions are not part of the problem, and they may actually, and I think I'm happy that Christine Lagarde said it, so I can only repeat it, that banks are part of the solution, in the sense that they are channeling the liquidity to the system as expected. Now, the question is, what about going forward? Will banks be able to support the economic recovery? And I think this will depend on 2 issues. The first one is, what about the policies that will be implemented? I would complement what has just been said by reminding that it's not just an issue of low inflation that we will face going forward, is that we will live in a world of excess savings over investment. So there is a need for investment, there is a need to create assets that meet the demand in order to avoid being in a low interest rate environment for very long. So banks are key in this respect. This requires active policies on the side of the monetary policy, But also, and I think sometimes this is forgotten, banks are private institutions in the sense that they are, I mean, public in the sense that they are quoted, they are shareholders, and lending is costly in terms of capital. So what we need to remind and to ensure is that banking remains an attractive business. And we don't scare people from investing in the financial sector. And I don't know if you see where I'm getting to, but at some point, banks need to be able to remunerate their capital and their shareholders. If we prohibit shareholders from receiving dividends on their shares for a long time, or if there is no certainty about it, capital will run away from the banking sector, and will make it difficult for the banking system to support the economy with by increasing credit to the real economy. So it will depend a lot on policies. I think monetary policy has done a lot. I think prudential policy is still a question mark. A lot of measures have been implemented to try to use the flexibility to the macroprudential measures in particular. But I think we need some certainty for shareholders in particular, for investors, to encourage them to continue investing in the banking sector to support the economy.
Thank you. I should say, if anyone wants to come back on any of the points that are raised, there's some interesting policy questions there. Thank you. Let me move on, though, to Laurence Parisot and ask you a little bit about how firms fit into this, and perhaps also with your sort of American hat on, how the US investors see Europe at the moment, and how firms are likely to, what sort of challenges the firms are going to face next year, particularly in the sort of post-COVID world, thinking through changes in supply chains and possibly even the sort of geopolitical implications of all that.
Right. I'm not talking as an American banker. I'm talking as a French person and a banker. And your question is very important because we have clients. We are bankers, but we have clients. And what I see is a major transformation of companies. I mean, with the COVID crisis, and many people said that before, but with the COVID crisis, there is a big acceleration of course, transformations that we saw already. But it is speeding up. And I'm thinking of 3 specific points which are very important for finance. There is no hierarchy in what I'm going to say. The first one is, of course, everything related to ESG, environmental issues. And we all know that now to do a green bond is just a commodity. But there will be more and more innovation coming from the finance sector in this field, which is very important and more important for our clients. So ESG. And I bet that there will be major innovation in this ESG market. Second point, digital. Of course, digitalization of the large companies is not new. It's not new neither for the financial institutions like banks. But here, once again, it's speeding up. Yesterday, for example, I was very surprised. I was talking with the chairman of a very big French company, one from the CAC 40, and I asked him, what does COVID change for you? And he answered, digitalization. I said, but it's not new for you. You're doing digitalization in your company for decades. Yes, but we realized that we are far from our objective and far from the needs coming from the clients. So for the finance industry, it will have also major impact. And for the European finance industry, and Christine Lagarde talked about payments, for example, but everything related to interoperability. In English, I don't know how to say. L'interopérabilité, même en français, c'est dur avec un masque. Thank you, Christian. Interoperability, it will be key. So this is the second topic, which is very important. And the third one, and I'm very impressed by the third one, impressed by the speed of change, at least the speed of reflection. It's about the supply chain. I see many companies considering very seriously change in their supply chain and maybe considering giving up globalization and shifting to regionalization, or at least to find a more flexible hub, considering seriously that the minimum cost shouldn't be the only criteria anymore. It will still be a criteria, but not the only one. And this will impact also the finance industry. For example, in trade finance, it will mean major change. So what I mean, Sophie, is for the banking industry, the finance industry, of course, we have to look at regulatory issues, but if we look, first of all, to what our clients are doing, that means that we have to adapt as fast as our clients to the new way of looking to the business. And last but not least, because you asked me as an American bank, I can tell you on my first point, ESG, the American are looking at the European as and saying, well, you are far ahead on all ESG issues. It's more fluid for you. You know it much better, and they feel that they are quite late on this specific issue.
Thank you very much. I think the way in which the conversation has changed, just thinking about an end to globalization, or at least a sort of limiting of globalization and a rethinking along more regional lines, that makes me think of the European debate as well, which I want to ask Christian Noyer about. Even at the beginning of this year, we were talking about fiscal consolidation still. That was the big subject. And now it's all about sort of the institutional changes which came together very fast in July. My question for you is, how much are these really a game changer for Europe in your view? How are these developments, how do you view these developments in Europe, which are, in many ways historic?
Well, I think really we are facing a quantum leap, especially in the field of the budget. Well, maybe the step is also important on the side of the ECB, but in some way it's an extension, but very significant and important of what it has done before. The first pillar was mentioned already by Alain Durel, is the recovery fund. And I think this recovery fund, if you really look at what it is, it has three features that resemble furiously a federal budget. The first thing is that it's a joint recovery plan where the funds are attributed in function of the needs, that in function of the importance of the recession created by the COVID crisis in each country. So it's really targeted to where the money is most needed. Money will flow everywhere, but the quantity of money relative to the size of the economies really depends of how important the hit was from the pandemic crisis. The second feature is the long-term objectives. And it's not just a plan to help you survive, but it's a plan to help you develop an improved economy for the future. And it's clearly targeting, in particular, two areas which were mentioned by Laurence, which are the digital kind of economy and a green economy, a greener economy. So it's really, and I think I also heard, like Laurence, that those features have some time impressed foreign friends. When they look at it, they say, oh, this is not just to help fill holes, but it's really aiming at the future and trying to rebuild the economy on promising grounds. And the third feature, of course, which was probably most commented, is the fact that this fund will be funded by the issuance of debt. The EU has sometimes borrowed in the past, but in general, small amounts, very targeted to precise features. This is a big amount, 750 billion. And it will mean that for the first time we shall have a large pool of EU debt, federal debt, quote unquote, in the market, which is for all actors quite a new thing. On the side of the ECB, the evolution is important with the ECB pandemic emergency purchase program, the PEPP. It's important for two reasons. One is that, sorry, the ECB's response was very quick and very powerful. In just two meetings, they decided a program of 1350 billion euro, which is 1.3 trillion. Which is absolutely enormous, and the market has clearly seen this response as incredibly powerful. But there's also a second feature that, given the strength of the hit by the pandemic crisis, and given the uneven way the hit has been on the different parts of the Eurozone, in order to ensure a proper transmission of its monetary policy, the ECB decided that this time, for this exceptional program, and given the exceptional circumstances, it will not use the ordinary features for QE, but retain full flexibility in the way the ECB or the Eurosystem would select the day after day the kind of securities that it would borrow on the market. And in effect, the result has been amazing, because the transmission of the monetary policy in terms of long-term interest rates was restored everywhere in all classes. Normal spreads have been maintained, as should be the case, reflecting the intrinsic safety of each kind of security, but nothing abnormal. So really the transmission is proper, and it's a great job.
Thank you. Alain Jury, can I come back to you and talk a little bit about the policy mix? We've heard a bit about monetary policy, but how do you see the long-term implications on the current crisis on coordination between fiscal and monetary policy, and the impact that could have on the recovery?
Yeah, well, at least I will stress two main points. The first one is, I think this is a bit underestimated by the market, but the stronger convergence of views we have today compared to the past. Stronger convergence of views between the key EU institutions, the European Council, the European Commission, and the European Central Bank, to increase the pressures on governments to take their responsibility to complete the institutional framework of Europe. That's very important, and that's a very good thing, I believe. The second point is, of course, back to this recovery plan, I will also stress the fact that, of course, it's always difficult in Europe. We saw the divisions in the July EU summit. But in the end, they made it, right? They established a long-term fund taking financial commitment until 2058 to precisely, as Christian Noyer underlined it, to send the money to countries where you need the money because there is a need to make fiscal stimulus, but they didn't have the sufficient fiscal space to do that. So that's a very important point. And at the same time, they did it despite the fact that, well, the track record in terms of reforms for many countries is still poor. You still have here and there some potential political fragility or instability, but they did it until 2058. And I think that beyond the quite important amount of 750 billion, the political signal is strong. And I would like just to give you two anecdotal examples from the discussion I had with our clients. Until July, the Asian investors, our client in Asia, especially Japan and Korea, the long duration investors, they were always asking me, do you believe there will be any progress in the institutional framework in Europe? Because their point was to say the many assets in France and Germany that we consider as safe, because you will still have Europe and the euro in some form as long as you have a strong German, Franco-German axis, which I think is right. Their point was to say, do you believe there will be sufficient political efforts to help the peripheral countries? Because we see that in those countries you still have cheap assets, but we don't believe there will be sufficient efforts to help them to resume the economic convergence. Those investors in Asia, they don't call me since August, right? I think they got their answer. The second anecdotal example I want to say is that I still had early July some key US hedge funds skeptical about the euro area. And there were a few of them were asking me, I'm not asking you whether the euro could break up in some form. I'm just asking you the timing, 3, 5, 10 years. Since the decision in July, I felt them totally disappointed. And they say, well, maybe the tail risk scenario I had at the beginning of the summer is not the profitable one. So I think that's quite telling.
No, incredibly telling. And sometimes one forgets how fast things have moved and how fast the perceptions have moved in a very short time, in a positive way in response to the crisis. Laurence Parisot, can I come back to you and let's talk a bit more about the Recovery Fund and Europe's response more generally. Is it enough? Are there weaknesses in it? Are there obstacles to putting in place some of the elements in the plan? How would you evaluate that response that Europe has come up with?
I think we all agree, and please tell if you don't, but the difference is the difference between the US and Europe in 2008 was the size and the speed of the reaction of the different government. And in the US, after the financial crisis, they moved very quickly the fiscal response answer was huge. So since then, I think we all understood that when we have a big shock like this one, we have to be quick, very quick, and massive. So the question is, do we consider that the European answer is quick and massive? I don't know. We can organize a debate on that. If I look only on the grants part of the European program, which is a little less than 400 billion, if I'm not wrong, it's not a huge percentage of the European GDP. It's less than 3% of the European GDP. The fiscal answer of the American government in 2008, it was almost 10% of the US GDP. But we have to add the national answer, of course, which is, but I think we can debate about the size of the answer. And the other thing, which maybe is more worrying, is the speed, because of the process, the procedures of the European governance. We know that the money, the countries won't, and the project won't receive the money before 2021 and more 22 or maybe 23. So I think that this answer from the European institution is great, but at the same time, it still shows the fragility and the incapacity of the European governance to act very efficiently and very quickly.
Or at least it's yet to be proven. The opposite is yet to be proven. We'll see next year. Lorenzo Benispaghi, can I come back to you? If we're looking at the European response, we can't not talk about capital markets union. We heard from Christine Lagarde earlier, urging that there's an acceleration of this project. In what way do you think that this is going to, how is this relaunch going to play out in reality? And in what way will it, or could it, help banks support the recovery looking ahead to the next year?
I mean, if we compare the current crisis with the previous one and how the current crisis is experienced in Europe compared to the US, for instance, well, certainly if you compare this crisis to the previous crisis, we've discussed it. We have a quicker response by the ECB, a response by the fiscal authorities. The third element that we have not fully mentioned is that we have a single supervisor, a banking union. So we have more Europe compared to the past, which means that more Europe means is good to address crisis, is good for everybody. Now, if we compare to the US, what are we missing? And clearly what we are missing is more Europe on the private sector, not only the institutions, but the private sector, and in particular, the capital market. And here we have to be clear. I mean, Christine Lagarde mentioned it. In words, in all politicians, everybody says we want a capital market too. But we have to realize what are the obstacles, and we have to point to eliminating these obstacles. And this is a work which requires effort and commitments by everybody, starting by the national authorities. I mean, if we want a capital market union, we have to eliminate first the remaining obstacles to completing the banking union. We cannot have a capital market union without a banking union. And we know that there are still national constraints, for instance, to move capital and liquidity freely across the union. Second, we need to have a single supervisor. I mean, like for monetary union, for banking union, we cannot have a capital market union with 27 supervisors. We need a strong center. It doesn't mean that everything has to be centralized, but at least decisions have to be taken in one place. Maybe it's, Paris is, is the place where ESMA is located. I think it would be very useful if more power was given to ESMA, which means that the national authorities have to accept, like it happened with the banking union and with the monetary union, to decide together rather than separate. And finally, regulation has to be implemented, and there is a responsibility by the Commission, the European Parliament, the ECOFIN. I mean, there are too many restrictions today to implementing a capital market union. I'm thinking about securitization, for instance. Securitization is viewed in Europe as a very bad word. In the US, clearly it has been the source of crisis in the past, but it is regulated, and banks can leverage on securitization to use the capital more efficiently, to make new loans. If you make a loan, then you can securitize it and sell it to the market, then you free capital to make new loans. So it's much more efficient, not only for the banks, not only for the markets, but for the real economy, to have a true capital market union. So the Commission has just issued recommendations. My feeling is that they're still a bit shy. And so I hope that in the institutional discussion between the Parliament, the European Commission, and the Council of Ministers, this time the European Parliament will try to be even more ambitious, because this is really what will make a difference for Europe, to have a true private sector integration through the financial system.
Thank you very much. There's one question I haven't asked yet, but it's because it's my least favorite question, but I'm going to ask Christian Noyer. It's about Brexit. It doesn't look at this point as if there's going to be an agreement on the financial sector. What would the implications be of that? Do you, and particularly for Paris, do you see activity already moving, perhaps? And what's your assessment of the outlook?
Well, first, I believe there should be no surprise that there is very little prospect of an agreement, quote unquote, in the financial sector or for the financial sector, simply because the financial sector does not belong to the WTO universe, to the universe of FTAs. It's all linked with the single market. I mean, the whole history in Europe of the single market was one day, and the UK was very active on this with good reasons. The idea came that if we have the same regulation, if we have the same judge to interpret the regulation, then why not have a single market where you can address clients directly from any place to any place? And of course, the UK having decided to step out of all those features, there is no room for inclusion in the single market, and therefore for the kind of services like finance that are really linked to the single market. Now, what does it mean in practice? It means that, as everybody knows, the passporting system will disappear next 1st of January. And after that, in a few domains, because it's not applying in the regulations for banking, for insurance, or I mean corporate banking, for instance, or individual banking, or retail banking, insurance, and many other things. But it applies in some parts of market activities or asset management activities. Equivalence could be decided. We have to recall that equivalence is by construction something that is unilateral, normally temporary, and certainly uncertain in the sense that a unilateral withdrawal is always possible. So it doesn't give long-term certainty, but it can help to do intelligent things when it's in the interest of both sides. The major concern for the EU being financial stability, of course, and to what extent can the EU accept not to have critical or relatively critical activities under its own regulation, its own supervision, its own capacity to, the capacity of its central bank to intervene and provide liquidity. I mean, that's the kind of key issues that exist. For the financial actors, things are relatively clear because the regulators and the supervisors have given to most of them, if not all of them, a roadmap. So, for instance, the banks know that before the end of the year, they need to have set up their book for corporate loans and for dealer broker activities somewhere in the EU, and they have done so. I think most of them, if not all of them, all the big and medium-sized banks have done it, if it was not done before. They must have transferred all the sales forces. It's not completely done. It was delayed by the COVID crisis, but its plans are accelerating, and it will be done for the end of the year. And then everybody has a roadmap for the rest of activities. For instance, the ECB has clearly explained that a critical mass of trading needed to be done in the EU, but allowed some extension, some transitory period, most of the time, part or all of 2021. So we shall continue to see those movements during a number of months because everybody wanted to avoid to have an abrupt deadline and risks of tensions. Now, what happened? As I said, a lot of things have moved already. The legal entities have been set up. The sales forces have mostly moved. When they have not, they will move till the end of the year. Some trading platforms have started to be organized here. There is also a complex map that has been shaped. For instance, there are entities that prefer to have a trading hub, a legal hub in one country, and a branch in another country with the actual forces. If you take, I mean, if you speak of Paris, for instance, Paris is home of certain hubs, banks, insurance, asset management. I mean, hubs coming from abroad that did not exist before. But more importantly, it has received activities from all sectors. It's the only ecosystem, I believe, where you will find everything. If you look to any other financial place, they may have received a number of hubs, but in general, not of all sorts of activities. It's well known that in some countries, the bulk of the insurance industry is not at all in the same place as the bulk of the banking industry. And in some countries, some of those activities are not, I would say, do not exist, but are very, very small. But one of the forces of Paris is that it seems to be where there is a concentration of dealer broker activities. Well, because you have the infrastructures, you have the whole ecosystem, meaning you have the buy side, which is important there, and that is growing also due to transfer from London or elsewhere. But it doesn't mean that all the hubs are there. The hub may be in Frankfurt, or the hub may be in Dublin, and the dealing room in a branch of those legal hubs in Paris. So that's what seems to be happening.
Thank you very much indeed. We are almost out of time. In fact, we've overrun slightly, but it would be nice to take a question or two if that's okay with the organisers. If there is one or two in the room, does anyone have a burning question? Or online? And if not, we can finish on time, and I can say thank you very much both to Lorenzo Binismaghi, who's not with us in the room, and to our 3 guests here in Paris. Thank you.